Hello, my friends. Mark Cunningham with Grace Property Management. And let me talk to you for just a few minutes about what I really believe real estate investors can learn from Zillow, specifically what Zillow just came out and announced that they are stopping their iBuyer or their home buying program. See, Zillow had set up a few years ago that they were going to enter the market as a real estate flipper. They were going to come in, they were going to buy homes, they were going to fix them up, and they were going to flip them. How hard can it be? We all do that, right? Well, it's a little bit harder than they thought. So let me just share with you a couple things from this article. This article in the Wall Street Journal just a few days ago with the headline of Zillow quits the automated house flipping business. Let me share with you a few aspects of this article and then share with you about 4 things that I think you as a real estate investor can learn from Zillow's mistakes. So here's what the article says, a few things here. It says our real estate firm Zillow is exiting from the house flipping business, saying Tuesday that its algorithmic model to buy and sell homes rapidly doesn't work as planned. It's just a problem with the algorithm, they're saying. That's all it is. It's an algorithmic problem model. I don't think it's only a problem with the algorithm, but that's what they're saying so far. The firm's termination of its tech-enabled home flipping business, known as iBuying, follows Zillow's announcement about 2 weeks ago that it was halting all new purchases for the rest of the year. At that time, so 2 weeks ago, Zillow said, hey, we're pausing our buying program just till the end of the year. We're just going to pause it. And here's what they said at that time. They're pausing it because Zillow pointed to a labor and supply shortage for its inability to renovate and flip homes fast enough. They were having a problem finding vendors and finding vendors that were not taking advantage of them. They were buying so many properties, they couldn't get vendors in there. That's what they said until 2 weeks later. They said, well, actually, it's not just that. It's a problem with our algorithm as well. Is it? Or is there more to it that we can learn? Let me go on to page 2 of the article and share with you just a few things here. It said they had expected when they first made this announcement that they were entering the iBuyer program, they were expecting it would generate $20 billion a year. Instead, the company said they've had to cut 25% of their workforce. They're laying off 1 out of every 4 employees. That doesn't bode well for the future of Zillow. They go on to comment that someone says, it kind of seems like this would be a hard time to lose money buying and selling homes. Best line of the article. With everything the way it is right now, how can you not make money selling, buying, selling, flipping? The real estate market is hot, but yet Zillow figured out a way to lose money on that. Zillow, which released earnings Tuesday, said its home flipping business lost $381 million last quarter. That's how much they lost in a quarter flipping. And if you do the math on that, on how many homes they have, we're talking like tens of thousands of dollars per property that they're losing. They currently have about 9,800 homes, an additional 8,200 homes under contract, and they expect to lose between 5 and 7% on every home they sell. That's not good. Now, if you follow the stock market, you saw their stock went terribly down when they made this announcement, even though they're getting out of a money loser. So what can we as real estate investors learn? Well, number one, house flipping is hard. We've done a number of flips ourselves here at Grace Management. I've done flips for a number of years. We've worked with a lot of investors. We've done dozens and dozens and dozens of these things. And we know that they're very difficult. They're very time intensive. They're certainly labor intensive. And you have to be careful. There is no algorithm that is going to allow you to go out and mass buy 8,000 properties and just put certain things into them and flip them. Why? Because problem number 1 comes up, that vendors matter. Vendor oversight matters. See, we as a property management company know that when we send a vendor into a property, we have to oversee that vendor. We have to make sure they're doing the work properly, make sure they're not overbilling us, make sure they're doing quality work. Well, when you try to do what Zillow was doing, or if you try as a flipper on scale to just have a whole bunch of crews going out, your vendors are going to start taking advantage of that because you're not watching them properly. So we've got to find good vendors. We've got to qualify them, make sure they do quality work, make sure they're affordable, make sure they have insurance, make sure they can get everything done. But then we've got to qualify them. So vendors and the cost involved in vendors matter so much. Number 3, technology is not going to solve everything. Zillow believed that they could do this because they had a beautiful algorithm. We believe, doing property management for over 40 years that property management is not a technology business as much as it's a people business, because we're managing tenants, we're managing vendors, we're working with real estate investors. It's a people side of business. It should be called people management, not property management, because a house never refuses to pay a rent. Tenants have trouble paying rent. Houses don't necessarily call when things break. The tenants call, and we're scheduling with tenants. And we understand that. We use technology. We love technology, but understanding that technology is not going to be the solution to property management or to flipping, because it relates to people. The aspect of relationship-based property management, we feel, is what's been key to helping us do this market for over 40 years in this business. Number 4, and this is a good reminder, I feel silly saying this, but it is possible to overpay for housing. Housing prices are so high right now. Are they inflated? Are things going to slow down? Who knows? Who knows what's going to happen? But it's not a deal. There's no deals to be had right now. If you're trying to buy low and sell high, it's really hard to buy low right now. So we want to caution investors about overpaying. Don't get sucked into the thrill of the chase so much that you want that property at any price. Be cautious and go slow, which is our last piece of advice. You can absolutely make money in real estate. I'm an investor myself. I love real estate. We love real estate. But there are times to slow down and make sure that real estate that you're buying is well positioned. It's in a good location. You're getting good financing on the property, or you're able to pay cash, even better, but you have good cash flow on the property. Why? Because as we just saw, things will go wrong. Things will break. If something has the ability to break, give it enough time, it will break. And expenses are up, and rents with legislation are difficult. So with that in mind, we want to be cautious as real estate investors, or especially as flippers right now. If you've got questions on this, we are happy to be your resource. Here in the Denver area, we've been doing property management for over 40 years. We have managed and flipped and third-party managed thousands and thousands of homes over that period of time. We're happy to offer any resources. Visit our website, rentgrace.com, where you can download information, do calculators. We've got a rent versus sell versus buy calculator on there to help you make an informed decision.